Hello everyone, it's me again, Prop Firm Checker, and welcome to today's video where we'll be discussing the trading consistency rules of Blue Guardian futures. Before we dive in, I'd like to take a moment to review the account options they offer. Blue Guardian provides two types of account, Standard and Guardian, which allow you to trade with account sizes ranging from $50,000 to $150,000. Each account type has its own profit targets and objectives, so it's essential to understand the differences between them. It's also worth noting that Blue Guardian is currently running a promotion where you can receive 50% off on all challenges by using the code XMES. This is a great opportunity to save, and I'd like to highlight that they don't charge an activation fee, offer weekly payouts, and have an end-of-day drawdown. If you're interested in taking advantage of this promotion, be sure to use the code to receive your 50% discount. As you explore Blue Guardian's platform, you'll also notice that they have a FAQ section, which provides detailed information about their services and answers to commonly asked questions. This is a great resource to learn more about their trading consistency rules and other aspects of their platform. And don't forget to reach out to their support if you have any questions. You can also connect with their community on Discord and Twitter. Now let's talk about their trading platforms. Blue Guardian offers a few different options for traders, including Project X, Volumetrics, and Volcy's Volbook. I highly recommend exploring the information on each of these platforms so you can choose the best one for your trading style and become comfortable with it before you start. Okay, so we're here to discuss the consistency rules for Blue Guardian's futures challenges. It's crucial to understand these rules to avoid any issues when trying to pass the challenge or when you're looking to get paid out. According to their site, a 40% consistency rule applies. This means that no single trading day's profit can equal or exceed 40% of your total accumulated profits. Make sure to familiarize yourself with all the details of this rule so you're not caught off guard. So let's break that down with an example. If your total trading profit for the month is $10,000, then 40% of that would be $4,000. This means the maximum profit you can make on any single trading day has to be below $4,000. If on your first trading day you made $2,500, that's fine because it's below the 40% threshold. Let's say on your second day you made $2,000 profit and then $1,000 on the third day. All of those are acceptable as they're all below the 40% limit. You'll need to calculate this daily to make sure you're staying compliant with the rule. Now, what happens if you exceed this 40% rule during the evaluation phase? Let's say you have a day where your profit surpasses that mark. Well, you'll need to continue trading until the highest profit day falls back below the 40% threshold of your total profits. So let's say your profit target to pass your evaluation is $3,000. Even though you've hit that target, you actually need to make more to satisfy the 40% rule before you pass. For example, if you made a single day profit of $1,300 and your total profit at that point was $3,000, then $1,300 divided by $3,000 equals 0.43 or 43%. Since that's above the 40% threshold, you'd need to continue trading and accumulate more profit until that highest single day profit makes up less than 40% of your total profit. This is something you need to constantly calculate to avoid violating the consistency rule. Now let's talk about the funded phase, the phase after you pass the challenge. Here's where it gets important for payouts. If the profit from one trading day equals or exceeds 40% of your total profit for the payout period, you won't be able to request a payout until the highest profit day's profit falls below that 40% threshold. It's the same principle as the evaluation phase. You can't request a payout if you're above that 40%. It's important to keep that under control to be eligible for payouts. You won't actually breach or lose your account for violating the 40% rule. However, you will need to keep trading and generating more profits until your highest profit day makes up less than 40% of your total profit. For example, if you made $1,500 on a single day, you'd need to reach at least $3,750 in total profits within that period before you can request a withdrawal from your account. So the goal is to keep that balance and stay below that 40% threshold. Okay, so if you have any further questions about this consistency rule, don't hesitate to reach out to their support. Remember, as long as you keep your single day profits below that 40% mark, you'll be in good shape. Now let's talk about payouts. Blue Guardian offers a pretty attractive payout structure. You get to keep 100% of the first $15,000 of your profits, that's all yours. After that, you'll receive a 90% profit split. This is actually better than some other prop firms, where the 100% split usually only applies to the first $10,000. Regarding payout eligibility for standard accounts, you can request a payout every 7 days. To be eligible, you need to have 5 winning trading days with minimum profits of $100, $200, and $300. Exact amounts vary depending on your account size. And of course, you must adhere to the 40% consistency rule we discussed. The minimum payout is $250 for standard accounts and $500 for Guardian accounts. Interestingly, when you request your first payout, but before you reach what they call the buffer zone, your maximum drawdown will be adjusted to your starting balance plus $100. This provides you with a bit more flexibility while trading. They also offer flexible payouts with processing times within 48 hours. Payouts are processed Monday to Friday before 3 p.m. CST, and you can receive your payouts through Rise Crypto. Finally, let's discuss the buffer zone policy. This is the point where your account has grown to a certain amount. You'll see they have specific buffer zone amounts for each account size. For the $50,000 account, the buffer zone is $52,600. For the $100,000 account, it's $103,600. And for the $150,000 account, it's $155,100. Okay, so remember to stay consistent with their 40% rule, and also keep in mind that you're required to withdraw 60% of your profits, while the remaining 40% stays in your trading account. Another key thing to note is the payout cap. There's an initial payout cap in place for your first 60 days of trading. This is designed to help you ease into the market while still managing risk. After 60 days and with 3 successful payouts, this cap is lifted. The maximum payout cap varies depending on your account size. Once the cap is removed, you'll have more freedom and can fully enjoy the benefits of your trading success. If you want more details, I recommend heading over to their Discord channel or contacting their support directly. You can get all your questions answered there. And before I forget, don't miss out on the 50% discount they're currently offering on challenges using the code XMAS. It's a limited time offer, so be sure to take advantage of it if you're interested. Well, I think that covers our review of Blue Guardian futures today. Thanks for tuning in. If you found this helpful, please support my channel by liking this video, subscribing, and leaving a comment with your thoughts. Thank you so much for watching, and I'll see you in the next video.